Today, we will discuss a requirement for all companies in the United States to provide cost basis reports to their shareholders according to IRS rules. This video aims to unravel the intricacies of IRS cost basis reporting requirements, highlighting its essential role in promoting financial transparency and accountability for shareholders for their tax filings. Additionally, we'll shed light on the significant role a stock transfer agent can play in managing this complex process, effectively easing the burden for your company. Cost basis refers to an asset's initial worth, which is usually used to determine capital gains or losses upon sale. The IRS mandates that businesses provide precise cost basis information to guarantee that capital gains taxes are properly assessed. With an emphasis on stocks and securities in particular, this reporting applies to a range of financial instruments. A wide range of instruments, including equities, bonds, mutual funds, and exchange-traded funds, or ETFs, are subject to IRS cost basis reporting. Companies need to keep close tabs on and disclose the cost basis of these securities to enable accurate tax calculations for shareholders. There are several different types of IRS tax forms that can be submitted for securities transactions by a transfer agent. But the one that we are focusing on today is the cost basis statement that must be provided to each investor at the time of issuance or stock transfer, even if the company is private. This rule was required in 2011 by the IRS and enforced to transfer agents and companies that don't utilize a transfer agent to send these statements to shareholders. If the issuers do not use a transfer agent, they will not be able to utilize SEC and IRS safe harbor protections. Here are 5 things for you to remember as an issuer. Number 1. A compliant IRS cost basis statement and notice should be sent to your shareholders whenever a stock transfer, issuance, or any other stock ownership transaction occurs for your company. Number 2. When you transfer stock, you are required to identify if the transaction is a sale, gift, or inheritance. Number 3. Shareholders may specify their cost basis type and request a statement. Number 4. If shareholders do not specify the cost basis correctly, Colonial Stock Transfer may treat all transfers as gifts. Number 5. If you opt for specific lot identification, you must select the tax lot you wish to sell prior to the transfer taking place. If you do not provide the cost basis, it will automatically default to the fair market value. If you're navigating the complexities of cost basis reporting, using the services of a stock transfer agent can be very beneficial. These experts are dedicated to keeping precise and current shareholder records, guaranteeing that each shareholder's cost basis is properly recorded. Here's why you need a stock transfer agent. Stock transfer agents maintain shareholder records according to SEC rules that are suited to the unique requirements of companies. This entails keeping track of the original share purchase price, further investments, and any company decisions that can affect the cost basis. Working with Colonial Stock Transfer guarantees a higher level of competence in the constantly changing regulatory compliance landscape for both private and public companies. With the complexity of IRS cost basis reporting, it is essential to have experts committed to remaining current on regulatory changes. Colonial can simplify the entire process of cost basis reporting for your company and provide real-time reporting of all of your transactions in its cap table management online platform for you and your investors. Contact us for a demo.